The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this Wednesday, the 24th of February. Dow's down 212 at 16,219. S&P is at right there, 1897, down 24. Comp index is down 59 at 4444.44. Oh, isn't that interesting? The VIX is up at 2253, up $1.55, back in the 22 area. That is really interesting because, well, we'll explain why in a moment. This ES chart that you should be looking at right now, wait, well, what happened to it? ES, oh, that's, of course, that is the monthly chart. You don't need that. I wanted to show it while I'm talking because very interesting arch formation. There it is. Okay, here we go. Interesting arch formation. The 1881 of the futures wasn't tested because we went to 1886. Day is young. A lot of things are going on here. You see right there, you see the big arch formation, second arch formation in the 120-minute chart, 1943.75, had to have an alternate count, peak F, reverse to the downside, and we went right through the support of the 200-period moving average at 1897, went down to 1886.75, now trading just 7 points high at 1894 right now. Very disappointing attempt to get off the low, but we'll go right through these numbers and we'll go to our callers because there's a lot to discuss today. Gold. Now, it's very interesting because gold has just been superb, up 26 at 1249. Hasn't given some of us who wanted to buy a dip a chance to get back in. You know, we just got stopped out by a fraction. One of our gold stocks, which is 396, and it's at 502, almost doubled. I mean, amazing. All right, well, we did make a profit, but nothing like that. Silver is up 21 cents at 15.45. Something's going on that's different. I need to talk about it, so I want to go through these things real quickly. You've got platinum down, up 6 at 950. High grade copper is at 208, down to, now bonds are up $1 and 19.30 and 168 and 11.30. That's very good action. And I need to, did I say the dollar? I meant to say bonds. The dollar, let's get rid of this for now. Move it into the corner like that. Now look at the dollar. The dollar, there was a question over the last couple of days. Does the dollar move? How often does the dollar move with the gold in the same direction? I did a very big study. I couldn't find the darn study last night, but I wanted to find it. There are periods throughout the year where for 6 weeks to even maybe 2 months, there'll be a parallel movement, not in the percentage move, but in the direction. Just remember, you've got to keep it in mind. There's a difference between mirror images, like a Dow diamonds, DIA, 100% long the Dow, and the dog, which is 100% short the Dow. You'll get a mirror image. But when you're talking about direction, it just says that one is going up and one is going down. This is different to Bach counterpoint, where you've got an equal move to the one side with a tune going the other way. This is different because what you've got is the dollar has made a top in the weekly chart that really suggests it isn't a C. It was a peak F at 100.51, just fractionally above the left side high of 100.39 a year ago. Now, what's really important about it is that when you get a cup formation and the very next recovery high is just fractionally above, and it's not peak A to peak B, but it's really peak B to C, or even C to D, that is where it's a heads up to say, be really careful because there could be a pullback that takes you all the way back to the bottom of the cup formation. In the dollar's case, it would be down at the 94, give you the number right now. That would be right there at the 92.62 level. Okay, and it's at 97.39. So this is I'm treating it as a counter trend bounce. The MACD in the monthly chart we've got a couple of days to go. It hasn't crossed negative, but it is turning down. Looks very much like a falcon or something over there. All right, and the stochastic made a much lower high when the dollar went in December to that 100.51 level. So I'm thinking that dollar is in a big consolidation. However, the euro, USD, and this is really interesting. The euro is trying to find support on the 9-period moving average in the weekly chart. So, yeah, I wanted to go through those. It's really important because I'm going to add just one more chart. Then we're going to go to Bob in New York, and I'm just going to put in the VIX index. The VIX right now is on the 9-period, just above the 9-period moving average of 22.43, gapped up. How will it hold for the rest of the day, or how will it increase is absolutely imperative going into the weekly Friday close. So this is a very important session. Bob in New York, how are you?
I'm doing good. How are you doing?
I'm well, thank you.
I wanted to know what your thoughts are on Macy's, letter M as in Mary.
Okay, Macy's, letter M as in Mary. I did not update this. This is really interesting because I was looking at some of the other retailers. So let me just E, and I'm putting it as an F. Could have recycled, doesn't matter. And then pull back sharply. I'm going to put a down arrow. I have no choice. This could be a G, so I'm going to put a plus right here. Haven't quite got a confirmation to say that it's a new buy. Okay, so do you have any position at all?
Yes, I am long.
Okay, now are you long with a nice cushion, or you just got long?
I just got long.
Okay.
Yesterday.
So yesterday. Okay, so you're yesterday. Are you okay? Did you get long towards the 41 level or towards the 42 level?
A little over 42.
Oh, okay. I wanted to ask that for two reasons. One is, I noticed, and I discussed this with, didn't discuss it, but in my opening call newsletter, I mentioned that the hotels hotel and resorts had a very strong move together with the airlines. Their monthly charts was still questionable, but it was a very strong move. So there's something going on in this market through the rotational aspect that is very important. Together with that, I didn't have a chance to mention it, but where did I put this? Yeah, I wanted to show you something on the retail index. The RTH is the Market Vectors Retail ETF. When you think that for a year now we've been in a consolidation in the general market, had a 15-16% correction, and now we're just off the lows, but not enough to say that there's a big turnaround. At the same time, after a year being off the highs, just 15-16% is actually quite impressive, and it speaks, I think, towards what I've been talking about for a while, the rotational correction and a possible rotational recession. I'm not sure how I'm going to be able. I'm starting to define it a little bit better. By Friday or Monday, I'll be able to give you a little more specificity as to what I mean by this rotational recession. But most importantly, the retail index is at 72.10, down 61 cents, and yet it's had a really nice rally, and even now it's holding above the 9-period moving average. The reason why I'm not going to rush you, I think we've got time. It's acting very well, so we can go to the break. There's no reason to put in a sudden sell. Hold on. Can you hold through the break?
Yes.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Dow's down 238, S&P's down 27. We did take a very nice gain, nothing like it was just even at the highs of 2 days ago in our Dow positions. But we still have some longs, which are actually holding up quite well. Now, the question here is, my question is, well, in the den, they're talking about recession. I said a rotational recession. Someone said, what is a rotational recession? For me, a rotational recession is where certain sectors that are really important to the economy take big hits. If you're looking at Macy's, it was up in the 72 area just 6, 7 months ago, and then it dropped to 33. Don't tell me that a greater than 50% decline in an important, one of the most important retailers like a Macy's isn't giving you a hint that within that sector there wasn't some kind of a sharp pullback. And of course, it's usually if the GDP for 2 quarters or more is seeing slowing down, and you have 2 consecutive numbers that come out, then you would be talking about a recession. So I'm using that kind of as a basis for what I'm looking at. So although it's certainly not an economic term, it's something I made up. I also wanted to show here, Bob, I'm showing, I don't know if you can see it, but in the charts that I'm showing right now, I've got something that was sent to me this morning. I haven't had a chance to fully read it, but the chart says, don't show this chart to experience. Subprime auto delinquencies hit highest level since 2010. And I was looking very closely at Ford and General Motors for a couple of days now. Didn't want to do anything. I just want to watch them. And they pull back very sharply. And they've already shown that regardless of the number of sales they've had, the price of those automobile stocks it has plummeted. Now, if I'm looking at this and I'm looking at the subprime auto delinquencies, and this is usually a heads up to say, watch out, something's coming. Look at these higher highs, A, B, C, D, we're in leg E up. This is subprime delinquencies, very sharp rally since one of the highest levels we've gotten to since 2009, 2010. And now look at the auto loan originations by the credit score. This is actually a leg that's recycled. So you might even touch that level way back there in 2005. So I wanted to show that chart. I also want to discuss Macy's. 73.61 was the high in July. And then it came down to, and I forgot to put in the low. The low was 34.05, and that was made in December. So there's been a very nice rally off that level, 6 points, nice percentage. Nothing when you're looking at the 73.61 high or the 200-period moving average in the weekly at 49.71. Now, the reason why I said I want to just have a look at it, today the market itself is down 1.45% in the Dow, 1.41 in the S&P, and the QQQ series is 1.5. And yet Macy's is down 0.61%. So it's showing really good relative strength just at the moment. It's also showing some nice technicals as the MACD is crossed back positive. The stochastic's back at 74%. I'd prefer if it was at 80%. I've just got a sign here that says the candle that you're looking at from yesterday with the very long wick to the upside, long wick to the downside, hitting the 9-period moving average, and then closing with a small candle in the middle says two things to me. One is normally what I would do is I'm going to extend this to the right, percentage to the right. Let's just go out 18, and I want to show you something here. Normally I would just grab my toolbox and I'd go to the rectangle and I'd grab the top, grab the bottom, and drag it across and say, okay, we're in a rectangle formation. Normally when I look at that, I say, great. It tells me, defines very well that the top of 43.51 is probably where there'll be another bout of resistance if it can get there. But what's really important is that the low that was made of 40.52 needs to hold. Now, I have a methodology here, and that methodology says if there is a close well below the candle body where the long-legged doji formed, yes, and not quite a doji, but the long-legged candle formed yesterday, there's a good chance the following day it'll try, if there's a close below it the following day, within 2 days, there should be an attempt to get into that candle. If there is an attempt and it breaks and closes above the body of that candle, that is above the open, which is at, the close, which is at 42.31, that's 29 cents higher, that suggests that you've got to go to the 120-minute chart, and the 120-minute chart has a chance ABCD. It's already done one 120-minute rally. It has a very good chance to go towards the upper part of the wick of that candle. That also says that I can give you a price, and the price says if it hits 42.80 within the next 3 days without taking out 41, that's going to be really good action. And it says that on the shorter term, there's an upside bias. It's starting to bump into a lot of resistance, but it should somehow work its way towards the candle high. Now, in this particular market, I don't know if that's going to be possible, but that's normally the way I would look at it. It says also, based on this particular methodology, that if tomorrow's candle doesn't close inside this body, and so far it's almost there, but it says close towards the low of the candle of today, that would put it in the 41.50, 41.30 area, you have to be very careful that this wasn't an isolated single move to the upside. So here's my question to you. Was this just the starter position where you thought, hey, if anything's going to rally, I think this has got a good chance to rally. I've watched Macy's for a long time. It's towards the lower end of its range. I'd like to buy it and see what happens. Or was this something that you said, I got a feeling Macy's is going to move much, much higher, and I'd like to get in because this is going to be a potential intermediate term buy and hold. So,
I think it's going to go a lot higher. I know they came out with good news yesterday concerning their real estate, what they're going to do with their real estate, and I thought that their earnings were, okay, not as bad as some people predicted, and it did hold the 40, which I thought was important. So that's my reasoning. I'm looking to go a lot higher.
So here's my thinking. I'm just going to suggest to you, you've got your, is this your full position, or is this one where you would add if it goes higher?
Yeah, I'll add when it goes higher.
Okay, great. So we're on the same page here. What I'm going to say to you is the weekly chart has begun a very nice move. There are a couple of indicators here that say what is today, Wednesday? If by Monday at this time, that's 3 trading, that's 2.5, let's just call it 3 trading days in total. If by Monday at this time, Macy's is not closed underneath 40.60, give it 40.50, right? If it hasn't closed underneath that, but instead has managed to hold here. In fact, it's even managed to climb into the 42.35 area or higher. I think you've got yourself a stock that has had its correction. It's in what we would call a counter trend move, and we'll see whether or not the daily really helps the weekly, and the weekly starts to move into the 43, 44 area, which will help the technicals, and slowly you'll get a turn in the MACD of the monthly to say, hey, I'm ready to test the 47s. So let's go one step at a time. I think you're in okay. I personally would say, even though you've got all your rationale and everything you're thinking about says more intermediate term, I'm going to give it a little bit more of room because of your stance, and I'm going to say to you, a close below $40 would say to me, be a little careful with your position. That's all I'm going to say.
Okay,
I hope
thank
that
you.
helps you, Bob.
Yes, it did. Thank you very much.
Great, and give me a call in a few days. Tell me how you're
Platinum,
doing.
grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. Basil Chapman. Dow's down 230. S&P's down 25. We're going to go to Brian in Jackson, Mississippi. Brian, how are you?
I'm doing great. I'm sorry I missed the very beginning of the show, and I'm sure you covered the S&P 500 index.
Nothing I can't review. So
Okay.
You got a question?
Yeah, I'm trying to. I'm long the S&P mainly, and I've got a small binary put, but I'm trying to figure out the pattern that I'm looking at on a daily. Is this turning into a trading range between 1820 and 1930, or is it? I mean, what am I? I mean, I'm trying to figure out what. Nobody knows what's going to happen next. I'm trying to figure out what's going on here.
Okay, so there are a couple of things, and I have very, very specific things that I can now look at. So I'll go to the SPY. If you remember when we were talking, I said there could be a little bit of a pullback in the SPY, but it looked to me like there could be, got to be careful because it could be a little bit, as insurance, it's good to have that binary position, but there could be a rally. Then there was a rally all the way to 193.79 on the 22nd. Yesterday was a sharp down day. Today we've gapped down, and it's gone all the way to 180. The SPY, which is the S&P 500 depository receipts, has gone to 189.32. So it's trading right now at 190.04. So this is what I'm looking at, because what I had said earlier in the week was there were two specific patterns that I'm looking at. My thinking was that, let me just go to the Dow, if you don't mind. I'm just going to, because this is already done, it's got the patterns. My thinking was that if there was a move into the 16,700s, high 16,690 to the Dow 16,720 area, I'd be looking at the W formation. If we failed at this left side high in the 16,660 area, 16,650 area, then I've got to think very carefully about, do we form the lowercase h pattern? And if you can see my chart that I'm showing in Tiger TV, going to a lowercase m. And if that's the case, we've lost the momentum to the upside. There's a good chance that we're going to stay in this range with a test of the lower area of the Dow towards the 16,000, close under 16,000. You have to think, uh-oh, that whole 15,600, 15,500 area can be retested. So it was a really important session. I can't say that I didn't put as much emphasis on the way oil was trading. It was in the back of my mind, but it wasn't in the foreground of my mind. I know Steve Rhodes has done some fabulous work looking at the parallels of the price movement with crude oil to the general market. And that's what we've been seeing the last 2 days, is crude oil just went lower and lower. It just could not hold any balance at all. Even today, I think crude oil is starting to pull back again. So this is going to be a really important session. But it says to me, especially since you've already got your insurance, right? You've got it in place. Then I just wanted to show the patterns. The one on the left was the possibility if yesterday was a pullback, it was a little deeper than I wanted. And that said, I've got to be careful. That's why I raised the stops on our long positions in the Dow. And now we're out of everything. And the most important thing was, how do we hold the 9-period moving average in the Dow at 16,309 now? It was at 310, I think, yesterday. Well, we're way under it. The MACD is still quite good, and the stochastic's still at 86%. But price movement is the arbiter of the trend, not the technicals, because sometimes price just does its thing, and then sometimes the technicals follow. Other times the technicals give you a great heads up. And in this particular instance, the price is down sharply. The positives of the MACD being much stronger in this move up should have taken the Dow probably more to the 16,750s than the 16,664 level on this move. So it's a little disappointing in that it lagged the upside energy. Now I'm getting and that's why I said this week I'm going to get a much clearer pattern. The reason why I said if anyone is really wanting to see how the market's going to act and react, yes, you could take a very small position in something like the Dow, but it's just a really small position, and it's to give you a feel for what's happening. Now I can give you my sense of the longer term, even though the day is young and anything can happen. So here we go. I'm going to go to the SPY because that's what your question was. I'm going to draw in the pattern right here. There's one arch that's formed. It went all the way back but did not go under 181.02 in that move on the 11th. And then it rallied quite sharply in the SPY's case. I've got D/B. And then I can draw in another arch. And it says very simply that for the S&P and the SPY to really break to the upside, and if it does that, it's going to be really important, and it's going to be, I think, very sharp.
Yeah, there's nothing really above it to keep it from it was like a free zone there, kind of once it breaks above the 1940 area.
Well,
I'm looking at the. I'm sorry. I'm looking at the futures contract, the S&P futures.
Okay, so let me just do this.
I'm sure it's the same looking chart, though. I can't see what you're looking at, but I'm sure.
It's a little different chart. I'm going to show it now. One of the reasons is that the S&P went lower. The 1804.25 low of January the 20th was taken out. It went to 1802.50, so that this has restarted a brand new move to the upside, and it's gone to a B. But when you're coming off lows, you can get failure patterns. So I'm going to make it real clear, because what I'm looking at here is that you have your insurance, but you got, as I remember it, your core position is a bigger position, and the insurance is really just to ameliorate some of the downside risk, right?
Right.
So here's what I'm looking at. If there's a turnaround later today, and I'm looking at some signs that are saying, within the context of this rotational correction, within the context of this rotational recession, within the context of the caller we just had, Bob from New York, looking at Macy's, which has had a really nice bounce and is holding very well, within the context of a number of stocks that I featured for my subscribers that are holding very well, there's a certain selectivity that says if, in fact, there's a rally, rather than, no, I'm going to give you the downside first. Would you mind if I go to the SPY rather than the E-minis?
No, that's fine. I can pull it up on another. I don't have Tiger TV.
Okay, so go to the SPY, and I don't know if you can see my chart at the same time. I keep typing it over here. Type it in right over there. I must call them up and see if they can change that. All right. So it's very simple. The SPY has got the H pattern that goes to a lowercase m pattern, but it really only breaks down if the SPY closes underneath this candle of the 16th. If it closes under 187.63, I'm going to make it a round number. If it closes under 187, closes under 187, there's just a really good chance that the SPY is going to retest the low 181 to 180 area. That's number one. That means you want to be holding your binary, right? Now, if there's a rally today and you close the SPY itself, which is at trying to turn around here, if the SPY can close above 1 at 191.20 is the 9 EMA. You know what? I don't want to. Do you have time? I don't want to rush this because a lot of people ask me exactly the same question.
Yeah, I've got plenty of time.
Good. Okay. I'd like to go through it as thoroughly as possible because a lot of people ask the question. I'm asking the same question. I want to see whether to get in or whether to stay out. I'll be right back with Brian in Jackson, Mississippi.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back, and we are back with Brian Jackson, Mississippi. So these are the numbers that I'm looking at. I just showed on the 10-minute chart. There's a certain pattern that I look at, and it says this, and we were actually down at 1895 when I typed it, and now we're at 1998.50.
Yeah.
And what I said was this can be a very positive pattern if the resistance at 1900 and 1902s is pierced within the next 35 to 40 minutes. So watch that closely. And I'll tell you why this is very important. I'm looking at a number of factors. And Steve Rose just reminded me, we're in a leg G/B in the transportation index. I mentioned just moments ago that the XAL, the airline index, had done very nicely. So there are signs here that some kind of a base is forming in some of the areas that have been absolutely smashed. I mean, the IYT went from 167 down to the most recent low in the 115 area. That's 50 points. That is a huge correction. So I'm looking at this and I'm saying, okay, I know the patterns very, very well. Now I'm going to go back to the SPY, and I'll explain why I'm looking at this and why it's actually a very important session, and it's actually a very important session for the commodities, many aspects. And I know that you've got Andy Heck giving a webinar tomorrow night for his subscribers on the commodities, and that should really, timing is perfect.
The 10-minute looks like it's breaking out. I'm just now looking. I've switched over to the 10-minute.
Correct, and that's new leg B in the 10-minute chart, and it's working its way. But we've seen this before. It showed it was almost going to do it before. This one is I love this the pattern that I'm looking at, and that's what I was saying. That a single leg A up, comes back, retests about 2/3 of the way, and then starts a very determined move. I like that, but we're still minus 177. There's still a lot of action to go to the upside, but it's still the reason why I was refraining from adding to the short side on today, rather looking at the longs. We try to get one long, which would have been perfect because stopped out by a couple of cents to add to a position that's done well. So that's the way I'm looking at. Now, let's get the numbers. So the SPY, this is still early in this M pattern, because until the SPY really, it can't just take it out by a couple of pennies, 194.95, the high of the 22nd. It's got to pierce it. It's got to really smash through. It's got to get into this candle of the 7th of January on the way down. 197.44 was the high. So I'm looking at this and I'm saying, I know this M pattern. It's a very critical period. It can change, and I'll go back to the chart formation. It can become very positive if in the next 2 days we're done with the selling and the VIX index starts to drop sharply, but it's no good unless the Dow gets into, by Friday afternoon, 16,700s or higher. It's a lot to ask, but that's what it needs. And the Dow cannot break under 16,000. That's going to be very negative. So going to the SPY, comparable pattern would be breaking to a new high above 194.95. Yeah, that's nice. That really is nice. But to make the pattern that says you've gone from the lowercase h to a possible M, and then out of the blue, just least expected, crude oil maybe starts around here, whatever it takes, but you want to see the cup formation, and that's a very powerful pattern. So the powerful pattern will be if the SPY clears 194.95, but really it needs to close somewhere in the 196.5 to 196.90 area. It needs to close there by Friday, any session by Friday, and that's going to say, whew, we've made it. The double bottom, that hairpin double test of leg D to the downside, trough D actually, going to the January, was that the January low? No, that's the February low. Going to the February, the 11th low, that's going to be, did we make it? Yeah, we went to a lower low, 181.09. Oh, we didn't. So there is, oh, this is so fascinating. On the one side, you got the cash index that went lower, but the SPY did not make a lower low at 181.02, January low, and then 181.09. So that, in a way, is a positive divergence. So the parameters are very clear to me. So the question would be, do you take off your profit now you've got in your binary, or do you keep it? And I think for safety's sake, it's just worth keeping it a little longer. And that's the way I'd look at it. But at the same time, the day is young. If this market turns around, the Dow closes down just 55 points, S&P down 6.5 after all this, that would say, whew, made it. Now you need a good up day on Thursday or Friday, and that says maybe we're out of the woods. But the pattern says speed is of the essence. You can't hang around and make it Wednesday by the time you make a new high. It's got to be really quick. We've got to get to a new recovery high in the SPY and the Dow above the high of the 22nd. Hope that makes it clear for you.
Thank you so much, Basil. I would appreciate your insight.
Thank you very much for calling, and let me know how it's going. That's Brian in Jackson, Mississippi. Thank you, Brian. Let's go to Michael in Toronto. Hi, Michael. How are you?
Hi. Thanks for taking my call.
My pleasure.
Okay. Could you look at Apple on the daily?
Yes.
Do you see the formation of a diamond bottom pattern?
Now, are you going to use the diamond? When I look at diamonds, which are very rare, other than the Dow diamonds, which that's what they call, diamonds are very rare, and I usually look at them more on the upside rather than the downside. I'm finding it difficult I believe very strongly that patterns have to jump out and wave their hands and say, here I am, here I am. It's not the other way around where you look and you say, oh, maybe. And for me, how are you doing the diamond?
The diamond. Okay, it's starting from you take the bottom on the 28th? Left side, the left edge, I guess, is basically 95.91 from early January. I think it's January the 6th, and the top is 100.98 from January the 26th. The low is 91.89 from I think end of January.
All right, I see that. Yeah, I see what you're doing.
And then the right one would be right now about 94. You see, so you connect them together, you get a diamond.
Yeah. Okay. Now I'm going to do something else because I can see that. For me, it would be. I do it a little differently because I wanted to look exactly what it's called, a diamond. And in this case, I've got it looking more like, I suppose I could do this. See what you're doing here. Yeah, you kind of, it's a complex diamond, let's put it that way.
Could be pyrite. I mean, it could be, it could be bogus. I don't know. I mean, I'm just looking at that. I mean, you see the diamond bottom formation, and we're at a critical juncture in Apple.
Let me give you another formation that, for me, is absolutely clear. It's the first thing I saw, is that there's a rising H that goes to an M formation. And what does it do? It takes the low that was made on January the 28th at 92.39. It has a little bit of a rally. It's more rectangle, but it's like a rally. And then it comes back and it makes a low of 92.59 on the 11th. Then the low of that day I use as an arch formation. So it's made one smooth arch and then one sharp arch that's gone from the low of the 11th to the high of the 18th down to today's low. So what we're looking at has the same result. So can you hold on?
Yeah, sure.
Great. Well, hold on. Michael in Toronto is holding on, and I'm going to discuss this pattern because it's the same H to M pattern.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. Got a bunch of callers. Got a bunch of questions. Just a real question on the questions. Crude oil, very important. That crude oil, great discussion with Tom and Tommy this morning. I think that crude oil, if ever there was a chance for crude oil to start moving higher, this is it. And I'd love to see it. And another question I had was, oh my God, I just hear you say you're out your longs. No, we're not out all our longs, just the longs that we had in the Dow. 2 positions, took profits, not a big deal. We can go back in. I just had to reserve those profits, okay, and that's what I wanted to do. Now we've got Michael from Toronto. We're looking at Apple. So, all right, the pattern that we're looking at in Apple, I don't like the pattern, but that doesn't mean to say that Apple couldn't. I think the market will, if the market rallies strongly from here, it'll drag Apple. Do you have a position in Apple?
Yeah, I'm just curious. I'm just curious. Assume I'm right. Assume that it is a diamond bottom formation on the daily. What's the measured move?
Well, the measured move, I'm going to use it I just...
use your technique. Use your technique.
Okay, I'm going to say
I'm
to you...
just curious, okay?
The only way it's going to break the diamond pattern, the way I'm reading it, is if the price right now, 94.29 on Apple, decisively takes, and speed is of the essence. So it has to do it by Friday or Monday at the latest, without taking out the low of 92.39 that was made on the 28th. Apple needs to climb above 95.51, and I don't get a measured move per se. I get a measured move where there'll be the greatest resistance, and that'll be at between 97 and 98. So that's quite a way to go for Apple. And I'm just going to say to you, if you are long, I'd rather be saying to you, keep your stop real tight. I would not want to close below that left side low bar. But at the same time, if it starts to rally, you can just have a trading stop because Apple is not looking very strong. I hope that helps you, Michael.
Okay, we'll talk about this next week then. We'll get an update.
Yeah, but you can call me Friday. It's Technical Friday. We can look at it a little bit more in detail for the triangle. Thank you very much.
Yeah, thank you.
For the diamond, yeah. Scott and Safety Harbor, we've got a moment. What are you doing? CX, let's go right to CX.
Looking for an entry point.
Okay, entry point on CX right here. It's at 528, and this is CMAX. And so now what we're looking at is down 5 cents. My suggestion, because of the action that it's done today, is if you got in right here at 528, I don't know if it's too big a stop for you, but at 528, depends on the position you have, 518 to 516 would be my stop. What you want to see is by 3 o'clock this afternoon, it's getting right into the body of the candle of yesterday between 525 and 527 would be perfect if it's able. Oh, it's at 528 right now. That was quick. So you just had a little penny pop.
Yeah, I missed it at the 5:05 this morning.
Yeah, I'd enter right
because,
now.
I mean, the market fooled me today, Basil, which isn't often. I really thought we were going to have a negative day. Maybe it was just the bad weather here in Florida, but I really thought we were going to have a bad day.
It could still be a bad day, but I'm just saying to you, I'd keep my stop fairly tight. I wouldn't get a full position. You've missed that opportunity. I'd start a position right here at 528, and I'll tell you right now that if it gets to 533 by 135 to 140 this afternoon, I would then say, great, we're a little bit out of the woods here, but mostly you wanted to close. Really, the best thing is if you get in now and it closes the day near a 539. If it closes at 539, it says it's going to go this is peak C, and it should go to leg D, and that leg D should come in Thursday or Friday.
How'd you like that Alcoa last week?
Oh, it was spectacular. Very nice. So thank you for calling, Scott. Good luck if you're going to do the trade. And I would, as I say, now you've lost your best position. Make it smaller, but I would still treat it as a move that has the potential to go to 556 for leg D if it's tomorrow.
You need to put together a special show on the Trump effect, and let's figure out what's going to happen when he gets in office.
Okay, yeah, that's going to be interesting. Okay, folks, Dow's down 135. I'll show you this chart one more time. There's the crude oil, and here is the E-mini. Thanks for being here. I'll be back tomorrow. Check out my opening call. I think you'll find it very interesting. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.